Okay, welcome to the live training. A little late tonight, some technical difficulties. Hopefully we'll get things worked out a little better here as time moves on. We did not send out a notification tonight, so we may be a little sparse in here. But if you have any questions, go ahead and put them in, just put them in the chat box and I will get to them and answer them for you. Tonight, I'm going to train a little bit about support and resistance. And the reason why I'm going to tackle this tonight is because we reached today some major resistant levels. And it's very important so let me explain first of all, the difference between a daily support and resistant level and say like a resistance and support level on a 5-minute chart. The daily holds a lot more weight to it. Just like the weekly does, it holds a lot more weight than the daily. So as you scale down, what that means is that when you hit a resistant level on a daily, say versus an hour chart, if it breaks that daily resistant level, then that means it's a sustainable move, meaning that you can put more trust into the move once it breaks a major resistant level on a larger time frame, that you're going to have continuation in that move. There's more of a probability of continuation in that move once it breaks a major resistance zone. And this is what we're going to look at tonight, because we have actually gold, we have the NASDAQ, all reaching some major resistant levels today. Gold did last week and it pushed through but came back. But we're going to look at that and we're going to see how that's going to turn around and push up through that resistant level. And it's a big resistant level. So if gold pushes through it, gold's going to travel quite a ways and going to go up in price quite a bit. So that's what we're going to look at this evening about resistance and support levels. And that's the reason why, because we actually had some big levels we reached today. So I have gold up here and I'm going to expand one of these charts here and we're going to go out on the daily. In fact, let's go ahead and go out on the weekly and we're just going to look at this level that we're talking about here. So we're going to squeeze this up here and you can see at this right here, you can see that this is a large, very large resistant level. And it has hit it once over here. And that was clear back in that was August of 2020. It hit it again right here. And that was March of 2022. We almost tapped it right there. And that was this year. That was in May of 23. And then last week, we hit it again and pushed through. So the week before that, we hit it. And then the following week, we pushed through. And this is a very, very big thing because it takes an incredible amount of momentum to push through something like this. It takes a lot of money. So we push through, and what we're seeing here, now we're going to expand this out a little bit now. What we are focusing on now, and let's just stretch this up here. We have this big push down, but you see it's reversing and coming back up. So what we're really looking at here is we're looking for this from here to here to be our swing out. So if we grab a fib, that means when this swings out, which I believe it's going to do, when this swings out, our target, and I am long this, by the way, our target is going to be first target right to there. Now that target sets at $2,196. Now, it may pull back as it breaks out of this resistance zone, pull back, retest, up, pull back, up. It just may not go straight up there. I don't expect that. But I do expect that it's going to reach that target sometime in the future if it comes back through and breaks this resistance. Now, there is a possibility that we could go ahead, because we haven't confirmed the breakout yet. It's pushed through, but it didn't stay above it. Or it could do this. It could go up, hold, and then start to roll over and come back down. All right. That's another thing we need to look at. But we're long it right now to see if we break out, because I believe there's a good possibility we could break out here. And we're going to discuss why that is when it comes to gold, and why it is when it comes to indexes. So there is a good possibility we break out of this, and I'll explain the reason why here coming up. I just want to look at one more chart before I explain the reasons why. But this is what we look for when we're breaking a big resistance zone. Now, likewise, if we were heading down, and we're going to look at that on the next chart, and let's expand this chart here. This is the NASDAQ. We're going to go out on the daily. Let's go ahead and just make it the weekly, because we've got some pretty good levels here that we can look at on the weekly chart. Let's scroll that up and let's look at this. All right, so we have tonight, we have broken through, or actually this week, it happened today. It went to resistance. Tonight it's breaking through. We are breaking through this weekly chart. We are now at new all-time highs in the NASDAQ. What are we looking for? We're looking for a target up here, and that target sets about, I'm just going to call it about 18.5, rounded off there, 18.5. That's where we're expecting the market to trade to. So we're expecting the market to continue on up to this level here, okay? And that's where we expect it to go to next. Now, this is an extremely large level, because remember, when markets started to go down in 2022 and everyone thought it was Armageddon, what it actually was a pullback. And what this pullback is doing is it's coming back up to here. And if it continues to break through, meaning this week, if we close solid above this resistant level over here, then this will be considered a breakout. And what that means is we start making our move up to the next level, which is going to set up here about 18.5. All right. Now, this is a big deal, because that right there is huge resistance, massive, massive resistance. And it takes a lot of money to break that resistance zone. So that means that the market is serious. If it breaks this level, they're generally not going to turn it around and come back down. They're going to keep it going up to the next level. Now, they may turn it up here, or if we squeeze this up, they may go even higher and turn it up there. All right. And that's what we're going to be looking for, a turning point at one of these two levels here, here, and here, for a move to the downside. Okay. That's what we're going to be looking for in the future. Okay. Now that's, maybe a month, 2 months in the future, but that's what we're going to be looking for. With that being said, let's go ahead and figure out how we as traders can play something like this. Okay. And, levels we need to be looking for and looking at. So let me just go ahead and remove these drawings. And what we're going to do now is we're going to go down into the smaller time frames. Okay, so this is what we're looking at right here. Let me see if I can squeeze this up. Yeah, I can get it right about there. And let me go ahead, and we're going to put this resistant level in so we can keep an eye on it as we look at this chart. All right, and we're going to blow it up here. And I'm going to switch these candles so they're a little bit more visible. So that you can see them a little bit better on the chart. Okay, that's better. Now you can see those. All right, what we are looking for here is we're looking for a swing to complete. And it looks currently like that swing has completed. So let's go ahead and see. And we do that with a fib. So yes, we have reached the first target of the swing, which is 16,678. It looks like we are going to go up and complete the entire swing without a major pullback to one, up there at 17,133. Now, what's going to happen at that level? Well, this is the pull. This is the break right here. We're going through the break. This black line's the break. So what we look for in something like this is we're going to look for a pullback. We're going to look for this, an up move. And then there, we're going to look for a pullback. Maybe it retests right here. And then we look for a continuation. Now, what we are looking for on this pullback, if it does in fact do this, we don't know if it's going to do this, but we're trying to put together a plan. So let's say we're long this right now. We're going to be long it. We're going to look at this level here, 16,953. That may pose some resistance. So you may get some pullback on that. And you got to prepare for that. But ultimate target, we think, is going to be up here. And then we're going to look for an aggressive pullback. Now, it doesn't mean it's going to pull back all the way down to here, but it would be nice if it did. So when we plan our trades out, we know these levels. So let's say I go down into the 1 hour chart now. So now we see that we have these levels. You see how when it came up to this, the 27, it kind of pulled back and then it shot right through it. Pulled back, retested the level, went right back up and continued its up move. What we're looking for is we're looking for that same thing to happen here at the 41. So we're looking at this level right here to be a resistance level to pull back. And what we look for, wherever that pullback finishes, we're looking for a change in direction. And we look at our things when we figure out that change, and we're looking for that move to break. And now we've got a trade clear up to here. And what's great about that is as you go, say, like you go down into your 15-minute time zones or whatever, as you do that, you are looking for every level. So you know where the resistant levels are. You're looking at every pullback as an opportunity to go long. So let's just say this pulls back here, long. Pull back, long. Okay. We're always looking at a pullback to go long. Now, let's talk about one of the biggest problems with traders and why so many don't succeed at trading is that they go against the trend. And what I mean by that is when you go against the trend, it's like catching a falling knife because everyone thinks that this is going to turn around. I see it all the time. I see people talk about it all the time. People think that it's going to reverse here. See, this was resistance. It's going to reverse. But look, it didn't reverse. It pushed on through. Let me expand that more so you can see it. It didn't reverse. It pulled back. But a lot of people look at this as reversal. And what they do on a move like this, because they think that they've caught the top of the move and they just load it up. Now, that can be in options. It can be in, CFDs, it could be Forex, it could be futures. They load it up because they think, this is the place. This is hard resistance. It's going to break and move back down. Well, they could be right? This is huge. This is a big resistant level, of course. You can try a trade there, but notice how I say you can try a trade there. And what I mean by that is you don't load up your initial position. What you want to do is you want to scale into your position. So one of the things that helps you to be create successful traders is that they scale into positions. And the reason for that is because they get more assured that the probability of the trade they're looking at is correct. Because when you break levels, support or resistance, it gives you a confirmation that your outlook is more and more correct. And so as you become more and more correct in the trade, you begin to add to the trade. So you may start off with one position, then add two positions, and then add three positions, and then take away one of the positions, let the pullback happen, then add two more positions as it begins to roll over and go back into your favor. This is how you manage a profitable position. Everyone always talks about how you manage an unprofitable position. That's extremely important to understand how to do. But you also need to learn how to manage a profitable position that is going in your favor. And the reason for that is because when you're trading, you want your winning trades to go as far and as big as possible, whereas the inverse is true on a losing trade. You want it to go as short and as small as possible, so you keep your losses small and your wins big. So if you say it goes in against you, say like I'm short here, I've got one position here and I see here and it breaks and it starts moving up like this. I see at that point, this trade is going against me. It's not a good trade and I need to get out of it. Well, I get out of it there and it's a small loss. Whereas, say it does go in my favor and it keeps heading down, it breaks this level and it keeps heading down and it breaks this level over here, goes down, pulls back, you take some profit, and then it starts heading down and it breaks your previous level. And so you know you've got juice in the trade, you're adding to the trade there, and you're maybe taking it off down here while you're holding these original positions that you put on the way down on the trade still. So you see the difference in management there. You're going to have to know where to add those trades, where to take away some profits, but keep some profits on. And that's how you manage a profitable trade and keep it going, keep it winning. And as it forms a trend, you stay in that trend and you add to that trend. Whereas if it goes against you, you get out of it as quickly as possible. Now, what most traders do is the exact opposite. And this is what causes you to lose an account. Most traders, if their position begins to go against them, they will add to it, thinking that it will reverse and pull back where they can get out of it. And they'll make all those losses they've just incurred back and they'll be fine. That's a very dangerous way to play this game because sometimes it doesn't pull back. And if it doesn't, you're going to get really hurt. It's better to develop the habit of just when you see that this trade is not looking good for your portfolio, you go ahead and tap the brakes and exit the trade with the loss. You can make up that loss. If you're confident in your trading system, you know that you can make up that small loss. It's not an issue. Okay. That's how you get rid of the psychology part of taking a loss, because the loss isn't that big compared to your gains, because you have confidence in your system and you have confidence that, hey, with my system, I can go ahead and get those losses back and have a very profitable day at another point in time in the future. So I'm not worried about it. I'm not worried about taking a loss. It doesn't feel so bad. It's always going to feel bad to take a loss, but your psychology, your psyche is not going to damage it to where, oh, I can't trade anymore. I'm totally a wreck. You're not going to have that. You're going to be calm. You're going to be understanding of your ability, and it's going to allow you to come back into a market at another time. It could be that day. It could be a week from then. It could be a day from then. But you know that some point in the future, you can come back into this market and you can reach in and grab your share of it, plus make up that loss you just took. And that's what helps you through the process. So when you see resistance and support levels being broken, those are signals to you, not only of big things changing, like say we looked at the daily and weekly, but also when you're down here on the smaller time frames, the 15, the 5, and you break support and resistance levels, those are areas as well that are telling you, if you're in a trade, stay in the trade or get out of the trade. They're signals to you. So if you're going long and you break a support level, you want to get out of that trade. If you're going long and you break a resistant level, you want to stay in that trade. And that's, you want to add to it, really. And you want to continue to hold that trade. People get so skittish about holding a trade because they're afraid that they don't see the trend. So they're just sitting there and they're trying to make up. They're just trying to get what they can out of the market, and they're trading scared. And you don't want to do that. You want to trade with confidence. Now, that trade may be a very small distance that you have to travel to take your profit, but you want to stay in that distance. You want to go that distance and get the full amount of the trade. So when you're trading, when you have a trade plan and it starts to go in your favor and you're breaking these resistant levels, you really, really, really want to stay in the position to your target, okay? And we show you how to work out those targets. We show how to find those places where, you know, there's a lot of sellers or a lot of buyers, depending on which way you're going, and where you want to take the profits and then lighten up in your trade, or maybe at some point you want to get out of the trade altogether. And we teach that in our mentorships. So that's really important to understand. Now, I'm going to get back to why are we breaking these large resistant levels. And I'm specifically going to dwell on gold and the NASDAQ. And this is the level, this black level right there. I'm going to expand that up a little bit. And we're going to talk about this. Now I'm going to bring something over here. Let me grab it. I want to show it to you. Okay, let me just expand this. We're going to look at it a little bit. Okay, this is what's called the 10-year Treasury. It shows the negative curve up against the 2-year and the difference in the yield curve and what that is. What we see here is we see that we had a very strong negative in this 10-year. And it came in recent years one of the lowest levels. And so this is what we're looking at. Now we see here when it goes negative. So this is back the .com and this is the housing bubble. And it tiptoed a little bit with COVID. When we go into this negative yield, we break par and we go into positive territory, and you see that we kind of get a little ways up there before we start to hit a recession. Well, right here, we haven't even begun to break par, and we haven't even started this chart to move above this level, which is par. So what we're looking for is we're looking for a break above this level and a push higher, probably, let's see, past, yeah, we're looking about 1.0 there, about where the recession started, and about 0.5 into 1.0 right here as well. So we're looking at those numbers. I would look at those numbers to see if that's where a recession starts, and that's what we're going to be doing. So why are markets going higher and higher? The reason why is because the Fed has been raising rates, right? They've been raising rates. In the beginning, the reason why we got a negative yield curve is because the front end of the curve was higher, the back end. But now that's starting to switch around, and generally that switches around. Well, the Fed is looking at today, they came out, today was the FOMC release, and what they said is we're not raising rates. We're keeping things where they're at. What that signals to the market is that in this case, inflation is beginning to come down a little bit. Okay. What that means is that we are having before inflation is a lot of money chasing after few goods. And that was mostly perpetuated through COVID because we had the distribution line or the supply chain contract dramatically because people didn't go to work. But we had government stimulus coming out, and so consumers had money to spend, but they didn't have enough products to buy because they weren't being manufactured. This created extraordinary inflation because there was too few goods and there's a lot of money in the system. And so people had to, they couldn't get their stuff. So what'd they do? Well, they put it in savings. And so, banks are just overloaded. They were telling big commercial to go in the money markets. They're too much. And so what has happened is over the last few years, as the supply chains have gotten better, more healthy, more goods have come into play, but the prices have still been substantially high. The Fed saw this and said, hey, we got to do something about it. And so what they thought they would do is raise, which is about the only tool they have, is raise interest rates. And what does that do? Well, when you raise interest rates, prices for borrowing get higher. And so it costs more to borrow money. And if you know anything about our economy, it runs on debt. It costs more to borrow money. It costs more to get a home loan. It costs more to get a car loan. It costs more on your credit card. Everything, cost of borrowing goes up. Well, what happens is consumers, because the cost goes up, they hold off on purchases, which means if they're not buying, then the suppliers are still producing, then inventories start to build and suppliers go, hold on a sec, we're getting more here than we can offload on the shelves of stores or homes or anything like that. And so what this does, it begins to slow down spending. And then what happens is suppliers stop making, and then people aren't buying. So suppliers lower prices, or retailers lower prices, and then to the point where people will start buying again, but they're buying more modestly because their access to capital isn't as great. What the Fed wants to see even further is they want to see a reduction in jobs. So if you get a reduction in jobs, then people are really not going to be able to spend because they don't have any money to spend, and they're really pushing back. They're just buying the bare necessities because they're waiting to get another job. Well, if employment goes down, which it has been, okay, I don't know if you've noticed the numbers, but they've been going way down, then that's signaling to the Fed that prices will eventually start to drop. And you're going to see that least of all and last of all in things like fuel, food prices, things of that nature. Because of investors buying so many homes, you're not going to see it as fast in the housing market. You're going to see it, but not as fast because we have a lot of investors buying up homes in the housing market to create a rental economy versus a home ownership economy. And so that's a little different caveat in the housing part. So that's why you haven't seen house prices crash so fast, because demand has dropped, but investor demand is there as still. So that's some of the things that are happening. Once that happens, then people look for a possibility of a real big pullback in the economy. And as in the past, they think the Fed will come in, reduce interest rates, and will make borrowing cheaper. And so this is why markets go up, because markets go up when there's more liquidity in the system. And they don't only go up on liquidity in the system or liquidity in the system, but they go up on anticipation of liquidity in the system. And so what we're seeing right now is a front running of the Fed coming in and eventually reducing, because of contraction, reducing interest rates. And rates have already started to fall a little bit. You know, they'll fall as time goes on. But if the Fed comes in and announces, say, summer of 2024, hey, we're going to start reducing rates, then we have the opportunity to borrow at cheaper rates again, which will hopefully, what the Fed's hoping is that the economy will slow down, cool off just to a point where they can control it. It'll reach some equilibrium, and we'll have what's called a soft landing. Generally, what happens is when you have when things start to go south and you get layoffs, you have what's called the domino effect, meaning this layoff causes another company to lay off because it's like a supplier to this company. And it's like a ping pong where it just, knocks down everything, and it does it really quick. And that's why generally we don't have soft landings. We have hard landings. It's like a full wipeout. And then what happens is we start to go through a recovery phase. All right. I don't know how this is going to go this time. Because like I said, a few things have changed. We have more investors in a lot of sectors of the economy. People made a lot of money during this pandemic, a lot. And so a lot of those businesses that made money, they're going to have stacks to bleed off before, it really hits their bottom line this time around. And they're not operating on the edge. They're operating with a nice cushion of cash on hand. And so they can stay solvent for a lot longer because of that. So the end consumer or the end person may lose their job. They may have a hard time, and that may trickle up quite a ways up the line, but it may stop because we have so much cash in these corporations that they're cushioned and they can withstand this, and we don't get such a strong hard landing. We'll have to see if that's true or not. We'll have to see how that works out. But this is why markets are moving higher, because there is an anticipation as well as some liquid coming into the markets to cause these moves to happen. Plus, it gives larger investors the opportunity to sell off shares as people are buying, because now they have people to sell to. As the markets go up, the larger investors are selling because they believe that there is a possibility that this recession coming up could be a lot harder than a lot of people are anticipating, a lot of economists. Not very many economists out there that are billionaires, right? So, yes. So we're talking about people who have billions and billions of dollars, are invested in a lot of different things. And this is an opportunity for them to sell a lot of those assets off to prepare for what's going to happen in 2024. And so this is something why we believe that markets will continue to go up to a certain point, but possibly when they reach that, they will start to taper off. So we looked at these weekly charts and this big swing that still has to complete. And so we're expecting it to complete if this market continues to break up. And that's this right here. So expect this line here to eventually either go to here or all the way up to 20,000 on the NASDAQ. We're not sure. We'll just have to take it week by week as it comes to us. But there is a possibility we could go clear up to here before markets turn around and start heading into a recessionary move, which would be way down. So that's what we're looking at. And that's how we identify why support resistant levels are so important. One, because they confirm that your outlook has a high probability of being successful, or it has a very low probability of being successful, and you need to get out of it before you lose any more on it. And two, it tells us that markets are anticipating, in this case, that inflation is starting to roll over and that the Fed is going to eventually lower rates, which is going to make borrowing easier. And borrowing is the fuel of the economy. It's the liquidity of the markets. It's what allows everything to function in our country. When liquidity dries up, when borrowing dries up, things get really hard. And so they're anticipating that the economy will strengthen some to a point, and then we'll see what happens from there. Okay. Now, with that being said, I want to introduce you to our company. It's, I think it's a wonderful company. This is a place where, and let me just get back here to the beginning here, and we'll go back to the platform. We as a group, so me and several other people have worked to really start to put this company together for the times ahead. And what do I mean by that? Well, as technology gets greater, I think there will be less and less jobs. I think that we will go to eventually universal income. And what that means is that our ability to earn larger amounts of money is not going to be possible. So you have a choice. You have a choice to take control of your financial future, or to let a government take control of your financial future. And eventually the middle class, that will be their two decisions. They're not going to have any more options. So this is what we do. And there's going to be very few jobs, which probably be for tech sectors. There'll be construction jobs, things like those aren't going away. But many service jobs are going to go by the wayside as technology gets bigger and bigger and bigger. And even high-tech jobs will start to go by the wayside as we go into supercomputing, as AI expands, all these things coming online, they're going to really change our economy. You have the choice to take your financial future by the reins and start directing it yourself. And eventually, this is what this site's for. Currently, we're teaching people how to trade so they can make income. Eventually, we're going to teach them through other experts how to invest that income to have reoccurring income. And that's our goal here at 7X Investors. So I'm going to go through the platform with you. Once you sign up, you're going to come in here and you're going to go through this welcome portion. And in this welcome portion, let me go back here. I'm going to go back up on the page because I went forward there. So I didn't want to go do that. Okay. So in this welcome area, you're going to start here. And once you come in, and this is going to take you through 4 videos on how to set up your account, how to set up so you can go into the community. So it's very important that you watch those videos. Once you do everything that's required of you in those videos, then you're able to go into our community. So let me now launch us into the community here. And this is the community. So you see here, this is where we have, this is where I post the weekly look aheads. This is the live training, which we're on now. This is recorded live trainings. This is where you can ask questions. So if you have any questions, you can come in here and ask it. Now, this part is all free. This is for people trying to figure out where they want to place themselves, how they want to go move forward. And right now we have 3 programs that we can put you in. In the future, we're going to have more. We're going to have more because people, they react differently to different ways of doing things. So we're going to have more in the future. So you have more choices that fit your personality. But I'm going to go through 3 of them. And then I'm going to go through a 4th one. It's not really a program, but it's an affiliate program. And I'm going to say that for last. But this is the free part. This is where you can ask questions. You can ask questions on any part of the mentorship programs. You can ask questions on any of the stats you see where we post share our wins. So we come in here and members of classes, they share the wins in here. So people in the free section can really see what we're doing. Here we have Barbara. She's part of our group and she's using a bot to trade with. Now, this isn't a fully automated bot. It's one that you have to manage, keep an eye on, but it helps you enter the trade correctly, and it gives you the highest probability of trades to take. Does it lose sometimes? Yeah, but it wins more than it loses, and that makes you a profitable trader. That's all you're looking for. So this was developed by Dan Kelly in the 7X Futures program, which we're going to get to. She's using this and having great success with it. I post some of my trades here that I do in the 4X portion of it. These are trades by Dan, which he does in the pit, in the 4X trade, which we're going to get to. But we share our wins. And the reason why we share our wins in here is because we want people to see that we're real, that we, that this can be done and that they can do it too, and to create a level of belief and hope. And you got to have that first before you put in the work, which is the faith, right? So we do that. If you have any things you want to discuss or, things we talk about, maybe give you the heads up on things in markets, so forth. Some of us will put things in here. If you have questions, you can ask questions here, and one of us or one of the members can answer it for you. The next thing we have is a program called Alpha Trader. Now, this is the program which I run. This deals with trading Forex and CFDs. And you see here, we have a free section here, but we also have where, I'm sorry, 7X Futures. I'm sorry, I got a little ahead of myself. This is Alpha Trader, but let's go back. There it is, Alpha Trader. So we see here, we have an overview. So where you can watch a video on what this is about. And we have advanced courses. We have training schedules here. We have live trainings. We Mind for Trading. That's where we really go in, get you set up on a system, then create habits in that system. And so that you can perform every time you get in a situation, you know how to perform and you're not trading scared. You're not guessing, you're taking high probable trades, and if they go against you, you can hurry up and get out of them. And then member chat, that's where you can discuss anything with me or someone in the group. Me and Ty are mentors in there, and we personally work with you, and we do it 5 days a week. So really a great program. If you want good mentorship, you want a good and solid mind for trading, and you want a great system to trade by. We have a system in there that tells you a very good spot to get into a trade so that you have the highest probability of getting into that trade and being successful. And it's simply, it paints an arrow to where you enter, and then we show you how to really confirm that that arrow is positive, that it's really going to go the direction it says it's going to, or if that arrow is saying, this is a spot, but it's not quite ready yet. And we teach you how to really know to trade that entry. So that's very important to understand. We get into 7X Futures, and this is futures. So we get out of the 4X and the CFDs, we get into futures here. That's with Dan Kelly. So he trades each morning in what's called the pit, representation of the pit in Chicago or New York. And what you do is you go in there with him and you trade live with him. So you can see how he's trading, what he trades, how he gets in, how he gets out, his frustration, his happiness, his frustration when trades go all over the place, and his happiness when they go in his favor. But each day he comes out of that room generally majority of the time with profits. And as you saw some of the things there, as we do in Alpha Trader, we go in and we come out the majority of the time with profits. And this is because we have learned our system so well that one, we can teach them, two, they're easy to understand, and three, through repetition, we've gotten really good at what we do. And that's the reason why. We've all gone through our big failures. We've all had years of practice and not getting it right and practicing again and starting to get a little bit right, a little bit more right, a little bit more right. And each year we get better and better. And that's what you want to be as a trader, because you want that money you put into your account when you're ready to not only last you a week, but last you months, years. And that's what we teach you how to do. Next, we have London Breakout. This is directed by Sean. And what he does is he comes in and he gives you a simple trade that you can take each night at London Open. It's either going to win or it's going to lose. We hopefully most of the times it will win. But this is for all those who just can't find the time during regular trading hours to trade. So you just get up, you put in this trade, you go back to bed. That's it. Nothing to it. And by doing this, you gradually grow an account and you're able to build that account to where you can say, hey, now I can put a little bit of this to one of the other mentorship programs. Now, Sean's not really a mentor in there. He's just someone who comes in, gives you the numbers, and you can choose to trade it or not to trade it. Whereas the 7X Futures and Alpha Trader, those are both mentorship programs. That's where you're going to get down in the weeds. You're going to really learn how to trade. You're going to put on your grit hats and you're going to just grind it out and get the grit going on so you can grind it out, learn how to trade, learn how to use the systems, and be a profitable trader. That's our main concern here in these programs, that you earn the money. Now, the next thing that you can do, if you see down here, you see the 7X Partner Program. The 7X Partner Program is a very good thing for members who join 7X. The reason why is, say, I can't afford the mentorship, because the mentorship on both Alpha Trader and 7X Futures is $249 a month. Now, let's say you can pay that for 3 months, but after 3 months, you should be making money in your trading to cover that. But let's just say I can't afford the 3 months. Then what you can do is you can start off by promoting 7X. And you can do it in a free type environment by sharing the 7X experience with other people you know, or with other people you have in contact out on the net and in social groups and so forth. You can take your link, which we give you once you sign up for the 7X affiliate program, and you can post that link. And you don't have to post your results. You can post mine or Dan's or any one of the students in our classes. You can post those and you can show your friends and people you know what we're doing in here. And they might just, one of them might just say, hey, I really like that. I'd like to sign up for that mentorship program. How do I do it? And you say, here's my link. Go ahead, sign up. And what you get every time that they pay their monthly fee, off of that, you get 35% of that $249. So that's like $87, just a little over $87 you get every month. You get 3 of those, and that's almost enough to cover your mentorship, or to cover your mentorship entirely. 5 if you want to produce extra money for trading. So you can take that other part, if you've got 5 people that you sign up, and you can take that extra part and put it towards a trading account that you can test in with real money, because that's what I believe. You learn your system through a paper account, and once you have the habits down in your paper account, then you transfer that over to a very small, put that over to a very small real account, or you transfer into what we call prop accounts. And one of those two is where you're going to hewn out your craft, and you're going to learn to make it habitual with emotion, because your emotion is going to change when you're trading live, when you're trading real money, when you're trading a prop account. It's going to change, and you're going to have to keep that all in check. You're going to have to learn how to do that. So you want to learn how to get your emotions in check. And once you do that, then you can add bigger money to your real account, or you can add additional accounts to your prop account. So we have a system in futures, and eventually we'll have it here in Alpha Trader, where you can go ahead and sign up and pass your prop accounts and pass so many. And then when you trade with the trade copier, and you simply put in one trade for $200, and say you have 10 prop accounts. That's $2,000 a day, but you're taking low risk and you're using leverage to help you out. So you, instead of staying into a trade where you have to hold it until you reach $2,000, you can put in one trade, you can reach $200, and then you multiply that by 10 accounts, and that's $2,000. And you make that each day. We teach you how to do that in these programs using prop accounts. So that's the advantage of using prop accounts. Of course, you want to go with reputable dealers who offer those, and we can point that out to you and give you guidance on that. But it's very, very achievable for any individual once they learn this craft to be able to do something like that, where they're making $2,000 a day. I want you to think for a sec. Where else can you go? And in a matter of depending on how quick you can develop your habits, in a matter of 3 months to a year, where you can go and be making $2,000 a day. What job can you do that at? Very few make that on a job. Very, very few. Usually you have to be a consultant or something like that, but very few make it in a job. So, consultant, corporate pilot, something like that, to make that kind of money in a day. And the thing is, it may generally only take you about 2 to 4 hours a day to do that. Where else can you do that at? Well, you can do it right here in the markets, but you need good mentorship to show you every step of the way how to do that. And that's what we offer here at 7X. So you really want to take the opportunity to come in, sign up as a free member, and to take advantage of, the help you can get in here as a free member, and the guidance you can get to help direct you to the path you want to take. I encourage you to sign up for that free account. All you got to do is go to www.7xinvestors.com. And that's all you have to do. Go in there and hit the button that says create account, and you're on your way. So I hope what we've discussed here tonight about support and resistance, about liquidity, about the Fed and how not raising rates does that, makes borrowing cheaper, how that adds liquidity to the markets. I hope that helps you in your trading. And I hope you understand, most of all, how support and resistance can really help you as a trader know if you're on the right path in your position, that you can hold that position longer and add to that position, or if you're on the wrong path and you need to get out of that position at a very, very early stage of the move. Okay. And that's what I hope you took away most of all from tonight's meeting. So take care, and we will be back here next week to give you more information on how you can become a profitable trader in the futures and Forex market. Take care now.